Now, the Monetary Policy Committee meeting was the key event that drove Nigeria's fixed income market last week. And joining me to discuss the drivers of the market going forward is Kizito Odunze. He's a bond sales analyst at Dunn Merrifield. Kizito, thank you very much for joining us. And Central Bank Governor Sanusi Lamido Sanusi just sharing his thoughts about monetary policy. There is clearly a tone about the need to be conservative, and the end of the tightening cycle hasn't quite ended, and he has made that point very clear even from last week when he made that presentation from the Monetary Policy Committee meeting. So I want to get your thoughts about the possible impact of the monetary policy stance going into next year. What do you see in 2014, and how is it likely to impact the fixed income market?
Thank you very much, Wale, for having me. As most people took from the MPC minutes from last meeting, it's obvious that going to next year, one option of any kind of loosening is almost out of it. So worst case scenario, we expect either to maintain status quo, or more people seem to be inclined to believe that there's going to be some tightening. And as the CBN governor clearly stated, there are several headwinds, several indications that there will be need for tightening from the fiscal, locally from the fiscal angle, and given the electioneering process and the preparation towards 2015, and also from the renewed talks of likely tapering that might take place from the United States of America, that has an effect across the world, especially for developing and frontier markets, of which Nigeria is clearly one.
Right, and what I hear now is that that tone has already impacted how investors are investing in the T-bills market. There is now a preference for shorter dated bills. Can you just talk us through the dynamics in the market post that MPC meeting?
Yeah, the market has this generally, or a couple of people have this impression that if any kind of tightening is going to take place, it probably won't happen in the first meeting of next year, which probably come around January. Most likely, people expect it to start coming from around March, maybe the second meeting. This also coincided with lots of talk from analysts from the US, people who follow the US market and who follow what the FOMC does. The talk before the recent release of minutes from the FOMC October meeting was that tapering will most likely start sometime from March next year. With that, most traders locally have decided a strategy of placing shorter on the T-bills markets, taking maturities that most people will be out of before March next year, or latest by March, so that when the possibly new interest rate regime or new rate regime takes place, most people can adapt to it. So, right. As I said, traders locally and investors locally are reacting to that and placing shorter in the T-bill market. All
right, let's talk about what's happening right now. And I hear this week there are likely to be some maturities in the bond market that could impact liquidity. Can you just talk us through your expectations for that?
Yeah, there are a couple of bond maturities that would hit the market this week. And given that there are bond maturities, some of these instruments are held in the hands of PFAs and private investors, we expect that there would be some reintroduction of those funds back to the fixed income market, fixed income universe. We saw a little bit of that last week, where there was a little bit of bullish run as a result of some of the bonds that matured last week. We also noticed that in this trading for today, there was a slight appreciation of prices or depreciation of yields, which we believe is also a continuation of renewed interest due to the maturity of the bonds. We expect that to continue this week and probably into the coming week as well.
Okay, let's talk a bit about the Naira. And I think the good news is that the Naira is stable post-MPC. At least for now, there is a sense that the policy is in a good place for the Naira. I think foreign investors also buying into that rhetoric. Your thoughts about the stability of the Naira right now, and especially before the end of the year, do you think this stability is going to be maintained?
The Naira has been stable from last week to this week, just one day of trading. However, there's a new development on ground. The nuclear talks in Iran seems to have changed the supply balance per se. There are talks that even though the sanctions on exports from Iran have reduced, but just the fact that the talks had improved, and the West had come to some form of agreement with Iran, there was about 1.6% drop in price. That came to about $1.75.
That's Brent. For oil, of course.
Yeah, for oil, in Brent oil. And usually, you know, the price of oil has a relationship with the value of the naira. So if the market perceives that there's more supply, the Suez Canal will be freer and more friendly, and there's going to be, and the Brent drops further, we expect the naira would most likely depreciate.
Right, so that's one risk for a lot of investors to keep an eye on. Okay, let's talk a bit about your expectations for the fixed income market now. T-bills in particular, how do you see yields moving into next week?
Coming into next week, we expect the bullish run to continue. There's going to be a lot of maturities, lots of liquidity, supply, or the market will get lots of liquidity in the coming weeks due to maturing bonds, maturing treasuries, maturing automobiles, and all whatnot. So we expect that demand to persist, at least going towards the end of the year. How that would turn in the beginning of next year is mere conjecture, but we expect some kind of bullish run to at least continue to keep us above the 13%, sorry, below the 13% rates on most bonds.
Right. All right, Kizito, thank you for joining us. Kizito Odunze from Don Larry